there, I feel like I'm dangling here. I went to Japan originally in 1986, and I had been studying Russian at school in Cambridge, and was going to be a Soviet studies major, and thought, oh, I'm going to help the United States fight in the Cold War, and I had all these kind of great dreams. And then I went as a missionary to Japan and forgot all my Russian and learned Japanese. The Berlin Wall was coming down, and suddenly Japan was important. But now, if you talk about Japan, it's more like the island Lost in the movie, or and I'm going to show a reference here. It's more or the Monty Python, Bring Out Your Dead, right? I'm not dead yet. I think we'll go take a walk. That's kind of the reception we've had with Japan for a little bit. But there's some really compelling reasons, I think, to look at and consider Japan. Taiyo, my company, we were founded 10 years ago. We started in California, in Monterey. I consider myself an economic refugee from the People's Republic of California. I came up here for the taxes. We brought our office up here about 3 years ago, but we focus primarily on Japan and Japanese equities. We've got about $2 billion of primarily kind of pension and endowment money that's invested in Japan. We do something we call a friendly activist. But before I get to that piece, I want to talk a little bit about Japan. And when you talk about Japan, there's several things I'm going to talk about. One is the fear factor of Japan. It might be a boredom factor for some people, but there's also a fear. If you're thinking about it, there tends to be some fear factor. A concept called tokowaka in Japan, which I'll explain, where we think the hidden value is in Japan, and then a little bit about what we do as a friendly activist. When we talk about it, here's the, I'm not dead yet. I go, and for the last however many years, I go out and talk to investors, and China. I'm interested in China. And so Japan has gotten significantly undervalued. But there's three big things that people tend to be afraid of in Japan. One is outrageous debt compared to GDP. Second is Japan still competitive, or has it lost its edge? And the third is, tell me about the demographics, right? And so is the sun setting in Japan, or is there something that might be there worth looking at? Let me kind of take each one of these, and I'll talk about some top-line things, and we'll go into a couple more details. And I'll make time at the end to answer questions. The first thing that everybody focuses on is right now Japan has about 220% debt to GDP, right? That makes Japan in all the world one of the biggest fiscal sinners when it comes to just looking at that ratio, right? It's worse than any of the European countries. And so that's, and I'm not going to sit here and say Japan really is a miracle place with no problems. It does have issues that have to be addressed. But what I want to share with you is why, and especially who here has read something from Kyle Bass? Does anybody know Kyle Bass? Kyle Bass hates Japan. He got and so I find I'm going around, and he's just been in front of me telling people how terrible Japan is. He went and actually got a loan yen on his house in Texas because he was so sure the yen was going to fall. He did this about 6 years ago, so he suffered about 6 years of pain, and finally this year he's getting a little bit back, but it's because Japan's doing it on purpose. There is, for most of these, there's some things that you should understand to really understand what's going on in Japan. If whoever said they're tweeting now, I just did something on Kyle Bass, and I'm going to get shot at by him somehow, I'm sure. The first thing with Japan is that unlike the pigs, right, unlike the European countries, Japan can issue its own debt in its own currency. The U.S. can do the same, and as we're doing. But what I really want to talk about in some of these missing pieces are not that Japan this is an exonerating thing, but that it gives Japan time. And the reason it gives it time is that Japan a lot of the debt issue, the debt dragon itself, well, it won't be slain. It can be tamed significantly by just a very small amount of growth. Because when you look at the debt to GDP, if your GDP hasn't grown for a while, that's part of the problem as much as your debt growing. So there's two parts of the equation. Now let's look at the time. One is that they can issue their own debt. The second is that Japan is the largest creditor nation in the world. Now everybody kind of intuitively, you know that, and you've heard it. But just to give you some comparison numbers, Japan has in debt that is bought of other nations' debt that it's bought, it equals about 62% of the Japanese GDP. And the implications of that are, if things got bad and no one was buying Japanese debt, which is part of the worry that suddenly nobody will buy the debt, the interest rate will go to the moon, and Japan is screwed when that happens. Japan it won't cover all of the debt, but just from the money that they have lent to other countries, including the United States, they can cover 62% of their GDP. Okay? It doesn't cover all the problem, but it gives them time. It's one of the factors that gives Japan some time. A second issue is a strong and stable domestic demand for JGBs, and this is a very interesting thing. Japanese JGBs, the Japanese government bonds, they're 90% subscribed by domestic Japanese investors, either banks, insurance companies, retail, not as much retail, but a lot of the pensions. Compare that to the United States, where 55% of the U.S. treasuries are owned by foreigners. 90% of Japanese JGBs are owned by Japanese. That means that if someone's going to have a problem with quantitative easing causing everybody to be afraid of the currency and demanding a higher yield, it's much more likely that the United States is going to get smacked in the rear first before Japan does, because Japan still has, and I'll show you kind of what their demand is. And all of this leads to not necessarily a solution of the problem, but time. Japan is not imminently about to collapse. It is not something that's on the edge of dissolving into nothing. And there's some other much more attractive things about the economy itself, but it gives Japan time for a little bit of growth, and we'll look at the growth piece and see what the options are there. First, let's look at the yields. I know some of this is hard to see, so I'll walk you through the pieces. We went through and we looked at the 10-year, 20-year, 30-year, 40-year demand for bonds in Japan. And this is, the dates are different. So the 10-year we've got since 89, 20-year since 87, 30 years from 99, and the 40 years only since 2007. But the median over-demand for supply, in other words, over-subscription. So in other words, the 10-year has a median since 1989 of a 2.9 over-subscription rate, over-demand for the amount of bonds that they're issuing. They have nearly 3 times as much demand as the amount that they're issuing in 10 years, and you can see that's kind of true for not just the 10-year, but also the 20 and the 30 and even the 40. And this is, again, primarily domestic. And even recently, so sometimes you can show that number, show me an average or median, and that's all because 10 years ago it was 5 and now it's 0. But this is as of October 1st, the 10-year was at 2.4 times oversubscribed. September 3.2, September 3.2, August 3.4. So even recently, I'll move this chair so that it's not. Even recently, Japan still has this significant amount of demand for its JGBs. This is one of the concerns. I'm not saying again that Japan is perfect. I'm saying there is this historical demand that's there. And what's even more interesting is since about 2000, people have been saying there's going to be some pressure on yield that has to give. But this is, with that kind of 3-4 times oversubscription, your yield curve in Japan for all the tenors has been on a steady decline. Again, I'm not predicting this goes on endlessly into the future, that there won't be some uptick. But here's kind of an interesting, this isn't our analysis, this is from the OECD white paper. They went and they did an analysis on Japan. They said, let's look at a couple of scenarios. Scenario 1 is this blue line that basically predicts that over the next 20 years, Japan will do very little growth. They'll basically, they're assuming, right now, in 2013, their real GDP growth is 1.6%. So we're going to assume that it's 1.2% growth, so it's actually slower than they're doing now. That there is only half, right now they're at negative 0.8% inflation. So we're going to assume 0.9% inflation, so about half of what Abe-san is targeting. But no real growth, actually decreased growth, a tiny bit of inflation. But we're going to assume over 20 years, they're going to be about 11% cutting in the cost of the economy, right? So they're going to have some financial consolidation, which is about 0.5% savings every year. And Japan is now kind of attacking that. In this base scenario, what they see happening, in none of these scenarios do you see an immediate drop in the debt. That's just not going to happen. But what you get is, even in that scenario, you get to kind of, they're at 220 now, they kind of stay in that, they go up a little bit and they stay in the 220 range. And the significance is, I think in some people's minds, the chart doesn't look like this. It looks like this, right? Everyone sees Japan going to almost an uncapped debt to GDP. But with just a small amount of cutting and a tiny bit of inflation, Japan kind of levels out. If you do, to get to these numbers, though, you don't have to go crazy. To get to these kind of red and green lines, the assumptions here, again, are 1.7% growth, 1.7%, and even the black line is 1.6% growth with differing degrees of inflation. So this green one assumes Abe-san gets close to his 2% inflation target. So we're not talking about, suddenly Japan's going to do 7, 8, 9, 10% growth and inflation is going to do this. It's a modest amount of growth, which is in line with what they've been doing, so not terribly much higher, sustained, and then a little bit of inflation. And the big difference between this one and this one is how much of that inflation then passes through to the interest rate, right? Because that's obviously a risk if the inflation rate goes up. But to look at your interest rate, the assumption is going from 0.7 now to an interest rate of 5.6 in the case of number 3 and 4.3 in the case of number 4. So we're talking still a 5, 6, 7 times increase in the interest rate. So they're not kind of wild, this guy's smoking crack promoting Japan story. They're fairly reasonable assumptions that if they occur can put Japan in a place where actually its debt is not killed, but the dragon is tamed a bit. So the second thing is competitiveness. Japan, one of the story that everybody looks at is, Panasonic, Sony, Sharp, they really don't make TVs anymore. Now if you buy a TV, what's the brand it's going to be? Samsung, right? LG, Samsung. They're Korean manufacturers. One of the things that's interesting about this is that when the United States, and I like to talk about Japan, it's in some ways it's 1975 or 1976 U.S. style in Japan. If you remember back then, the U.S. was the king of manufacturing. We owned the processes. We made all the cars. We made the televisions. And suddenly this upstart nation came in and started competing with us and building the televisions. And what did the United States do? We made enormous cars. And secondly, with TVs, instead of investing in the technology for a TV, what we did instead is we went out and we bought furniture stores. And so then you got your TV in this nice wood case. Nothing inside was changed, but your TV now had a really big, huge console and maybe some big speakers on it. Japan has gone upstream. So Japan makes all the pieces that you need. It's still critical. For example, one of the companies that we're invested in is a company called Olvac. They don't make the flat panel display. They make the machine that makes it. And it's a very high-end process that Samsung and LG have to buy from Japan in order to make their televisions. So Japan has gone where the margins are higher and where the technology is high. Secondly, Japan continues to be the highest collector of patents. And I'll show you a little bit, compared even to South Korea and China and Germany. And then the third point is that Japan really benefits from Asian growth. Japan is more well-positioned than almost any other country to participate as these Asian countries grow. This one's hard to see if you're in the back. But partly what I want you to note is what we went through all the industries in the world that drive our economy, that really at the high end. So we've got imaging, everything from DSLR and cameras, the compact cameras, copiers, inkjet printing, auto-related machinery, robots, heavy machinery, LCD touch panels, components, SPE. And if you look at these, what you'll see is the market share that Japanese companies have collectively within the world. So this one country, if you look at imaging, it's 98%, 90%, 88%, 95%. They own the imaging industry. And these are going to be increasingly important in things like factory automation. Japan owns the technology that leads to factory automation. Let me take a step back here for just a second. One of the companies that we're invested in is a company called NIFCO. They make the little plastic fasteners that hold your car seat on, right? It's a little thing that goes through and pops like that. And it's not a high-tech industry. You wouldn't think of it that way. It's engineered plastic. But they have a factory that they had been building. They build in Korea. They also build in China. But recently, about 2 years ago, they came back to Japan, went way down to Kyushu in the southern part of Japan, and built a factory. And the factory is almost fully automated. During the weekend, there's 2 or 3 people there. They run 3 shifts. I mean, I guess as much as robots do shifts. And during the week, they maybe have 10 to 15 people there. There's a couple of places where they need still manpower. But this is a factory that's probably 6 or 7 soccer fields big, that's run by about 15 people. And the way that they do it is because of sensors and imaging technology. So when they make these, if you've ever made a little model car, the model car comes out and it's in plastic that you break off all the pieces. That's how their parts come out. They've got a machine that breaks all those apart, puts the good material into a bin, puts the waste material into a recycle bin. There's lasers that check the height of that. At a certain point, there's a little robot that comes along the floor, picks it up, and it follows a little guideline. So there's sophisticated and not so sophisticated robots. Picks up the thing, takes it over to where packaging goes. The other one takes it over to recycling. They've even got some that now will recycle. They can recycle right there. They've got recycling right on their machine so that they can dramatically reduce their cost. And this is all done. The manager basically has his laptop open, and on the weekends, if a red light comes on, he knows he's got to go down and do something. Otherwise, he doesn't have to be in the factory. So automation is one of the things that Japan owns, and you can see it in these other places. It's still driving a lot of the technological development. The other piece on this slide is just the number of patents that have been awarded. This is between 2007 and 2011, which is the latest data that we could get. Japan had about 1,300 patents that they received during that time period. Compared to the US, it's about 40% higher than the United States. South Korea at 424, China 350, Germany. What's also interesting here, though, is if you look at the light blue is the percentage of patents that are awarded that they applied for. Meaning, if you have a high number here, you have a higher grade of patent. It's more defensible. So China applies for patents, but only gets about 25% of theirs approved. Because some of that will be copying things and whatever. Japan has a very high rate. US is at about 40. South Korea is at nearly 50, close to Japan. This is just kind of tidbits of information for you to put in mind. The third point I'd mention is that Japan benefits from trade with other countries. Now this is the Japan trade surplus with some of their Asian rivals, Korea, Taiwan, and China, which we include Hong Kong in with China. This is the dollar amount cumulative 2002 to 2012. Now within the China number, there's a little bit of hair on it. Japan with China mainland is slightly at a deficit. If you include Hong Kong, it's slightly at a positive recently over the last couple of years. Partly that's because every once in a while China gets domestic unrest, and the best way to get rid of domestic unrest is to have an overseas enemy, and Japan is an easy target. And so there's suddenly things will happen, and exports to Japan shut down or imports get shut down. Some of that's wrapped up in here, and some of it is also the 2011 earthquake is wrapped up in that as well. But on the whole, Japan still is, if you look at trading partner, Japan is Korea's number 2 trading partner, China's number 1, but Japan accounts for 15% of all imports into Korea, 21% of Taiwan, and 13% they're the number 1 importer into China. So as these countries gear for export, Japan is a critical part of their growth. Third point is demographics. Japan, everybody knows, is an aging society. And in fact, if you look at just this statistic, by 2050, 43% of the population will be over 60. Think about that. That's massive. 43% of the population will be over 60. That has all kinds of ramifications in healthcare, in job and labor supply. There's all kinds of things that have people concerned. That's not going to, I tell Japan, anyone that'll listen to me, and nobody does, but if they would have more babies and lower their taxes, Japan would get out of this. I'm an unrepentant supply sider. But this isn't going to change. Japan's not going to suddenly have more babies. They're having, right now, they're at about 1 point something kids per couple. They're not quite as bad as Italy, but and Japan is in no rush to import a lot of people from other countries. What they've typically done is they brought in a whole bunch of Iranians for a while until they could blame all the crime on the Iranians, and then they kicked the Iranians out, and then they brought in people from Brazil. There was a lot of Japanese actually in Brazil. They brought them in, and then they revoked their visas and sent them back, and then it's Nigeria and Ghana, and they kind of go through the whole world. They'll let them in for a couple of years and then kick them back out. They're trying to import Filipino nurses, so there's some issues here that's very real that's addressing this, and they're going to have to address at some point immigration, but I don't think that's going to happen soon. But some points to consider, their other competitor countries are aging at an even faster rate. Even though they're behind them now, they will catch up fairly quickly. There's a second, and I'll show a thing on that. There's something called the Donkai Junior, right? And this is a Donkai. These are the baby boomers in Japan. They have, there's a bubble of kids that are the Donkai, they're called the Donkai Juniors, that are right now in their kind of 35 to 49-year-old peak earning and peak spending phase. And that bubble is still kind of increasing. It will for a couple more years. At some point it'll slow down, but these guys are in their peak earnings and also spending. So there's some money that'll be flowing in the economy. And then a third thing that's happening in Japan is, because Japan reached this point faster than everybody else, the development of robotics in day-to-day use is kind of more advanced. And I'll talk about a couple of those. So first, here's the demographics of Japan versus South Korea is 15% now, but by the same time period, by 2050, they're going to have a really fast aging population. They're going to go from 15% to 41. Taiwan goes from 12 to 33. Germany goes from 26 to 40. Italy goes 27 to 39. U.S. goes from 19 to 27. Just to kind of give you a feel for the aging of the dynamics. Japan's already gone through its rapidly aging phase. It's not going to have a lot, and one of the morbid things is that they're going to start having some of these people that are cost, and they're going to start having some of those people disappear, die, pass away, and so some of their problem actually gets solved by just life cycle. That's not a popular topic in Japan. Let me talk a little bit. There's two other pieces on where Japan is. One of the places that we like in Japan is healthcare. Japan has, if you look at the U.S. healthcare industry, it kind of went, you have all these verticals that there was lots of M&A in, and big vertical groups developed. And then as these groups developed, they kind of went horizontal, and you got the massive healthcare companies in the United States, and it's happened in Europe. Japan hasn't even done this yet, really. So there's a lot of really interesting companies in Japan that are very, very technologically advanced either in process or in medical machinery that have decent market share in Japan, superior technology, but really haven't become global brands yet. And that's beginning to happen right now. So I think there's some interesting points there. But another thing is just looking at, this is a percentage of the population over 65 versus the general government health spending as a percentage of GDP. What you find is Japan has been able to manage, with this one of the oldest populations in the world, it's done a good job of managing its costs so far. Now, partly that's because Japan's done a good job. Partly it's also because Japan has a unique place, and we'll talk about this more. It has unique characteristics that we'll talk about more in the pension, when we talk about pension. This isn't directly related to that, but if you remember in the 2011 when the earthquake hit Tokyo, so they shut down a lot of the nuclear reactors. They were worried. Power generation dropped by a third. The government went out and said, all right, we need everybody to cut back on your electricity usage. They didn't force anybody's meters to turn off. They just said, we need you to voluntarily do this. And I think in most cities they would have been laughed to scorn. In Tokyo, voluntarily, the power consumption went down by over a third. That's just amazing. I don't think that would happen in any other country. And it's one of those, there are unique things in Japan that happen. This healthcare and the cost will be one of them. But then the second part is this development. This robot right here is actually an exoskeleton. We looked at investing in this company and decided not to because there was some Japanese companies that were paying way too much, and we let it go. But I tested out the equipment. What you do is you put this on. It's an exoskeleton. What they found is bionics, right? The $6 million man, where you integrate machine with flesh, is really a hassle. There's so much rejection that it's a pain. But what this guy did is he said, I can take someone that has been paralyzed for years and find a small electrical current in their arm, and that electrical current is enough to make this thing move. And so this does two things. This little exoskeleton they've developed, they hooked it up to my arm, and they said, they didn't put it on, they actually hooked me up with wires with the sensor, and the arm was over there, and they said, without moving your arm, move that arm. And so first, I'm like, trying to not move my arm, but as I kind of relaxed and just began to think about it, I could get the arm to begin to do this just by thinking about it. It was quite amazing to see, and I'm hyper attuned to using my hands. Someone that hasn't been that is very attuned to those little impulses. So what they've been able to do is these things also add some strength to the body. They can hook them up. I watched an old man that was probably in his late 80s and early 90s. He'd been bedridden for over 10 years, hadn't walked. They put some of these on his legs, and he got up with his walker and just started walking. They had to tune him up, but it was without practice. They just hooked him up, and he was able to begin walking. So they've got one is there's an assistance for the elderly with this kind of thing. Second is the nurses weigh dripping wet. They may weigh 60 pounds, 65 pounds. And when they've got to take someone and put them into a bath, it's a difficulty. This thing will allow them, right here the demonstration they're showing is a guy holding four 60-pound bags of rice, right, that he's able to just kind of, it gives, there's a strength that they can put on a healthy person and give them added strength on an excellent. This isn't, every single person in Japan is not doing this. This is still a developmental company. But I've seen the technology work. I've seen it in action. And these are some of the things that are coming in Japan that will deal with some of this aging dynamic. I'm going to keep on plowing through here. The second thing I'm going to talk about is what I call tokawaka. Now, you've probably never heard of tokawaka. And when I go to Japan and say the word tokawaka, many Japanese don't even know this word because it's a specialized word used at the Ise Shrine, which is one of the more sacred shrines in Japan. I'm going to talk about it in a second, but this slide is something that we use more often for Japanese to give them hope that there is a recovery. The U.S. had nearly 2 decades of zero returns, roughly. And Japan is now, its lost decade is actually two decades long. Tokawaka, the concept, is a 20-year cycle. And actually, I'll go to this in a minute. Actually, let me go to this word. I'm going to come back to tokawaka. I'm going to teach you another word first. So there's 2 Japanese words I'm going to teach you today. The first one is kiki, which is crisis, right? This word in the middle, kiki. And so Japan, part of the reason this is relevant is right now Japan kind of considers itself in a bit of a crisis, and that's why Abe-san was able to come to power. But within the word kiki, there's 2 Chinese characters that they use. The first one, this ki, is also used in the word kiken, which means danger. The second ki is used in this word kikai, which means opportunity. This is a very uniquely Japanese concept that I really like, which is within a crisis, there's an opportunity. Within danger, there's an opportunity. Second word then is this word tokawaka, which means this is kind of perpetually renew or perpetually be young. Now the reason this word is interesting is there is a shrine in Japan called the Ise Shrine. This is the most holy of all the shrines in Japan. And it's about 1,200 years old. So it's been around for some time, except that every 20 years, they completely demolish every single building and bridge and rebuild an exact replica right next to it. Every 20 years they do this. No other country does this. If Egypt did this, we would know still how to make the pyramids, right? This is very uniquely, if there's no other country that takes its most sacred and oldest heritage site and destroys it and rebuilds it. But what happens is, that a couple of things, they talk about destroy, create, and then passing on of traditions. And this is something that's very much alive in Japan. They, and it comes on a 20-year cycle. This 20-year cycle is really interesting. When they do the shrine, generally what happens is, if you're going to work on this shrine, you start when you're 20 years old. That's the first time. So there's a group of young men that are 20 that begin to do this work. They get to do it again when they're 40, and they do it again when they're 60. They'll do it 3 times. The first time, they're basically muscle. Second time, they're more management. And the third time, they're kind of the artisans that are teaching the young guys how to do things. So this is, again, this is kind of built into Japanese thinking and concept. And if you look in Japanese corporate world right now, one of the interesting things that's happening, 10 years ago when we went and talked to Japanese companies, we would go in and we'd say, what is your cost of capital? And here's what the Japanese management would say. Sometimes they would look at the CFO and go, yeah, what is our cost of capital? And the CFO is counting ceiling tiles because he has no idea and hasn't heard the word before. Some presidents that were on their toes would say, well, I don't have any debt, so I don't have any cost of capital. Or others would say, my dividend is 1.8%, so that's my cost of capital. Right? That was the level of understanding in Japan of cost of capital, return on capital. EVA was not a word that they understood. What's happened in the meantime, if you remember in the 80s and 90s, many US business schools had tons of Japanese executives come over. Right? Suddenly they were competing, and there were Toshiba and Mitsubishi, and all these guys sent all their executives over to the United States to get an MBA. And 2 things happened once they got their MBA. One is they said, what the heck am I doing working for a Japanese company? I'm going to go work for Goldman Sachs. That was a big chunk of them. The other part said, it's my duty. I'm going to go back to Japan, and I'm going to go back and earn exactly the same salary I was earning 2 years ago with no promotion, and no one will ever talk to me again about anything that I learned. But it's going to be stored dormant here. In the 10 years that we've been doing this now, we begin to see some of these managers have moved up into the director range. And when we say cost of capital, you can see like the computer chip kind of old-fashioned blinky coming on. Oh, I think I know what that is. And we've begun to talk about this. So this is a new concept in Japan. These guys have moved up in this 20-year cycle, in this Tokugawa cycle. And the management in Japan is different than the former kind of post-war development guys. These are guys that don't remember Japan as a very wealthy country, or if they did, they were barely starting in their career. They've gone through a much more difficult situation in Japan. They're more open to ideas that their mentors were not. So you've got a generational change that's happening in this Tokugawa. Again, I said it's 1975, 76. The U.S. went through this cycle that I mentioned, kind of some of the most powerful companies in the world, competition with Asia, and then kind of reinvents itself in this space and owns the space again. Who knows what will happen in Japan, but our argument is that Japan's going through a similar thing. It's going through this kiki, this crisis, right? Most powerful country in the world in manufacturing, huge competition, 2 decades, lost decade, and now we'll see if Abenomics is part of their Tokugawa cycle of this renewal. As we talk, that kind of leads us to Abenomics. And so there's a couple of questions about Abenomics. One is this will it be a serious catalyst? Or I have a terrible analogy that I'm not ever supposed to use, that I use for Japan. I'm going to use it anyway. Japan, in some ways, investors in Japan have kind of felt like a trailer park wife. He's not going to hit me this time. They leave, they come back, and he hits them, and they go, oh, I'm never going back to Japan again. That's what most investors, when you talk to them about Japan, that's what they feel like. They feel like every time I trust Japan, I get beat up. So this is a question that comes up. Is this for real? Is there really something here that's worth looking at? And the second is, are Japanese equities an attractive place to invest in the first place? So let's talk a little bit about Abe-san and why I think he's an important part of this equation. Number one is Abe-san, well, let me read this quote first. If I am unable to make Japan a great country and a robust country this time around, And remember, this is his second time as prime minister, so he's a one-time failed prime minister. If I'm unable to make Japan a great country and a robust country this time around and pass it on to the next generation, then there is no meaning to the life I have lived thus far. If an American politician said that, you'd probably be going, this guy, I mean, what's this guy trying to pull? In Japan, there's a slight threat that he might do something to enforce that, right? This is a guy that's very serious about it. And there's some reasons to believe that he's serious. The first, as I mentioned, he seemed to have failed fairly miserably the first time around. Abe-san is also seen as a bit of a nationalist. Now that conjures up all kinds of scary images, and Korea hates the idea that he's a nationalist. But in Japan, what it really means is he's sick and tired of Japan kind of bowing to everybody. He doesn't like that their constitution was driven by the U.S., imposed on them after the war, and that they have to pretend that they don't have an army. They do have an army. They call it a self-defense force, but they have to pretend. Let's don't pretend anymore. We're a nation. We're big boys. We've grown up. We're one of the most powerful countries in the world, and yet we're acting like we're 14-year-olds. And there's a certain amount of support for that in Japan. But what he found is that if that is his agenda, it goes nowhere. He can't do anything without economics. That's the lesson that he learned if you talk to anybody around him. And so his focus this time, I'm going to jump down to here, singularly is on economics. He is focused on getting the economy back on track. Now, part of the other things that are driving him is that his grandfather and his great-uncle were both prime ministers in Japan during the growth. There is huge family pressure and honor and embarrassment and shame and all those wonderful things that drive Japan. More than money, shame drives Japan. He has the potential for shame very, very strong over him. It will cause him to do things that other prime ministers that are there as placeholders would not be willing to do. He's the youngest prime minister in Japan post-war, and he's the first prime minister that was born after the war. I think in the same way that Bill Clinton was the first post-war president and thought differently than all the predecessors, you have a similar kind of change here in thinking. I mentioned he's got something to prove, and he's got a single focus. So he's part of the equation. Japan has, over the last 3 years, I don't know, they went through 4, 5, 6, 7, 8. They were almost kind of a prime minister every 9 months was their pattern for a while. This guy, I think, has some substance and will be there. The last election that happened in July was important because he won't face re-election again for 2 or 3 years. Because of the majority that he was able to get in the upper house. He had a majority in the lower house. In July, he got the upper house. And it's Japan's system is like the UK, so it's kind of a parliamentary system. And the leader of the ruling party, it becomes the prime minister. He finds himself in a place where he's got, compared to most Japanese prime ministers, time. Now I'm going to go through these a little bit faster. I'm not sure how familiar you are with what he's talking about doing, but he's got 3 legs of this. He's not just doing quantitative easing. He's trying to do fiscal, monetary, and structural reform. A look at, this is how much the U.S. has spent so far. This is the addition to the balance sheet of the United States, $1.6 trillion since we began doing this serious quantitative easing. Japan has planned $1.3 trillion. But relative to GDP, the U.S. was about 9.4% of GDP versus the number he's talking about is about 40%, not GDP, percent of market cap of the market. Japan is talking about a number that's about 47% of the market cap. This is huge. I'm going to talk about this as one of the tailwinds. This is enormous. If you look at what's going on with the United States, there's no reason to explain constant highs on the stock market, except that money's afraid to go into bonds because we've got so much quantitative easing going on. The economy's not in this super place, and yet we still there's this huge power of money there. So one is the size of this is massive, and he's doing it in a shorter time frame than the U.S. They're trying to do it in about 2 years. Fiscal, they're doing a sales tax increase, which I find a stupid idea. But what he's going to try to do is offset it. He's doing this to appease the bureaucracy that thinks tax is always up and better. He's got to appease those gods but he's going to do it and get in return, I believe, an even larger corporate tax cut. Already, they moved the tax rate from 40% down to about 38. It's supposed to move to 35. There's talk of it going to 25. That will leave the United States in first place as the least attractive corporate tax rate in the world. We can wear that with pride. Not that I have any opinions on that one. And then the structural piece is actually, this one is, there's a couple of pieces here that I think are important. One is the TPP, the Trade Agreement, the Trans-Pacific Pact, I guess it is, led by the United States for trade within the Asia-Pac region. China is not a part of this. They would have to seriously loosen up their markets. Abe-san has agreed that he is strongly pushing Japan to be a part of this and to sign with it. And that is important because he comes from the country where the farmers have a vote. One farmer vote in his district is worth about 600 votes in Tokyo. So the farmers have this huge amount of power. And if Abe-san says, hey, we're going to do this, he's going against his own base. This is a very kind of bold thing for him to do, not typical of an LDP member. Pension reform is another one. There's two parts to it. One is the pensions are moving from a lot of money in bonds to some money. It's not a massive move, but some money in equities because they've got to get a return. But secondly, Japan is the only country where the government could say, all right, everybody, sorry, I know that we promised you these pensions at this level, but we're going to have to ratchet everybody's expectations down. We're going to, instead of paying this, we're going to pay this. And instead of retiring at this age, you're going to have to retire at this age. And Japan's probably the only country where that wouldn't cause riots in the street. They're not planning on doing this yet, but it's a piece that I think you will see in the future if this becomes a bigger issue. And he'll be working to kind of there's some other pieces here. This is not anything to do really with Abenomics, but there will be things. Japan has a very highly educated, very skillful female population that's underutilized. What I see increasingly in factories is factories that are run by women. Right now, there's some management. The floor is almost entirely women. And that goes to the automation. Manufacturing has changed. It's no longer a big muscly guy forcing the hood so it'll fit. It's electronics and precision and detail. I don't have time. There's a story I could tell you about one of the factories that's completely automated, but I'll say that for another day. But it's driven by this female participation. Is it working? Well, it's still early. There's some things to look at. One is, if you look at consumer confidence, the red line is consumer confidence. Here's when Abe-san kind of was announced. Well, the stock market's given Abe-san a big vote of confidence. It's up 65%. And I'm going to show you some numbers later that says that's not a reason to ignore Japan. It was so oversold, so ignored, that at 65% up, it's still 40% below kind of averages. Expectation of inflation is up. This is what I call the $1.8 million tuna. This is an actual picture of a tuna that's worth $1.8 million. That's some very expensive sushi. The tuna market had been declining for the last 15 years. It's about 490-pound tuna. Sold in January for 1.8. Last year's top price, this is 3 times that top price. So the high-end sushi stores like to do this because it gives them notoriety. I went and ate at the most expensive sushi restaurant in all of Tokyo. That's kind of the idea, and that's part of where this is coming from. That market has been fairly dead, and only for a relative few. Ferraris are up 46% year on year for Ferrari registrations. And luxury watches in the Ginza shopping area, 2 times sales of last year, right? So there's these little things that Japan has been a dead zone for these markets for quite some time. We're beginning to see little things that suggest maybe this isn't just the head fake that Japan typically does. But those are not things that tell you that Japan is intrinsically valuable. How are we on for time? I'm closing up on the. I'll just skip probably the end part a little bit, but let me talk about 4 tailwinds for Japanese equities. Sorry, this isn't specifically about the value of Japan. This is reasons that I think the equity market has room to go up. Things that are going to push it. The first is what I've already mentioned: Bank of Japan doing a massive buying spree. This is Japan. This is setting everything back at 2007 when the U.S. and the U.K. began their dramatic, or right before they began their dramatic increase in the federal balance sheet. Japan is just starting to play catch up. If the Bank of Japan governor does what he says, they'll probably be in this kind of 200 to 300 range within a short period of time. So it's just kind of a look at what's going on. But he's looking to put a lot of money. I've already kind of addressed this. He's looking to put a lot of money fast into the market, and I believe that will have a similar impact on the Japanese market as has happened in the United States. Secondly, Japanese pensions and insurance companies are at historical lows on their percentage of assets in domestic equities. So right now they're sitting at, the insurance is in the red, the pensions are in green. They're kind of 12 and 5% respectively. If you look at historical averages from 79 to 2012, it's 22 and 16. There's some weird years in there, so you could say, oh, did something weird happen there? But it's really, what happened is the first 2 decades, Japan was at about 30% here, and then they've been at about 14% for the last decade getting out of equities. But there is now a slow movement to look back at equities again and begin to change their makeup. In the United States, about 1974, when the ERISA law began to become relevant, you also had Japanese or U.S. pensions owning about 30% of the outstanding equity, and they began to be a force in the market. CalPERS is one of our big investors, and they're a prime example of that kind of exerting their power. Japanese are right at that 30% right now, and we believe they'll begin to do the same thing. They've already begun to vote their proxy, which they didn't do for many, many years. They've begun to reject and vote no on their proxy, which is an even bigger deal. Sorry, I'm right in your way, aren't I? So I apologize for... Second tailwind is retail investors. No, so this is the third. The first is the Bank of Japan. The second is pensions and insurance moving to the equity market. The third is retail investors. Japanese investors have had, right now, they have $8.7 trillion in cash. That's the whole GDP of China. Japanese have sitting in cash. It's been earning 0.00001% interest for years, and that seemed like such a stupid thing to do, except that with deflation, actually it wasn't such a stupid thing to do. But as you begin to see signs of inflation, if you look at shares of equity versus currency, Japan, US, and Europe, I believe there's some room here. Japanese retail investors will begin to move into the market. Now this movement that we showed, this 65%, is without this movement having really happened yet. So I believe this will be another tailwind for Japan. The fourth one is foreign investors, and I've just selected 2. I was on a panel several weeks ago with Alex Kinmont. He's gone from a bull where he would say, today Japan is of no general importance except as a laboratory experiment concerning deflation. That was his in 2002, to now saying Abenomics is re-injecting profit and re-injecting tax revenues, offsetting the rise of interest burden that comes with higher nominal interest rates. He's become much more of a bull in Japan. I think he's actually started his own fund. Mark Yusko with Morgan Creek. Japan did the ostrich. They ignored deflation, thinking it would go away. Then they tried to catch up and monetize it, but they couldn't, so they become a 19-year bear market. Now he's saying anticipated inflation, which is the case for Japan, is good for stocks. People rotate from bonds into stocks, feeding fire to stocks. So we've got some, whether it's true or not, you get this sentiment of foreigners saying, oh, I'm going to look at Japan again, and you'll get a fourth tailwind in Japan. What should we do for time? We're working? Okay. Japan is still cheap. This is Japan versus its price to book. It's still trading at about a 40% discount to kind of this mean. Actually, well, the mean's up there, but it's trading well below its kind of historical, even at price to book. If you look at price to book versus EV to EBITDA, we've got kind of US up here. Russia, Korea are cheaper, but Japan is right down there in that lower quadrant of countries that are still looking at a couple of measures. There's no perfect measure, but even versus global peers, Japan is still a relatively cheaper market, especially considering its size and sophistication. One of the things that people tend to ignore is that Japan has had, over the last decade, its free cash flow has improved significantly. Its equity capital ratio has gone up to close to 40, a little over 40% from where it was 10 years ago. its break-even ratio, and I think this is an interesting one, has been on a steady decline. One of the things that's interesting, Japan has had the highest currency. No other country has had to deal with a currency that inflated every single year. I remember when the yen hit 150, Japanese management said, "Oh my gosh, we can't make money." And then this is 150 is our limit. And then it hit 130, and they said, "Oh," they ratcheted down. 130 is the best we can do. And then it was 120 and 110, 80 got down to 70. Just in September of last year, they were saying, "All right, 70 is the peak yen that we can possibly deal with." But what has happened is Japan has learned how to steadily improve its profitability and its break-even ratio in all kinds of yen. So as you get relief from the yen, I believe that's going to be a snapback opportunity for Japan. A second thing, after the 2008 crash, dividends had been on a generally increasing run. They dropped dramatically, but your total yield, if you look at buybacks versus dividends, has been on, other than the crisis, kind of a steady increase in Japan. And that trend is continuing. There's much more sophistication in the management's office than there was 10 years ago. Here's the other piece that I find really interesting. Japan is really undiscovered in many ways. This is the island lost. If you look at number of analysts covering large cap, Japan is roughly the same as Europe and the US. In mid cap, it's slightly less. In small cap, the kind of 500 million to 2 billion, it's significantly lower. And then in micro cap, it's much, much lower in its coverage versus the other markets. But that doesn't tell the whole story. Second part of the story is the number of analysts per company. In large cap, even though the coverage is roughly the same, Japan has about just around 60% of the coverage of the other developed markets. Mid cap, it's about roughly close to half. It's about a fourth in small cap, and it's about a 10th to a 12th in the micro cap. And I think if there's one more chart I could show you, which is the number of relevant pages, you would have an even greater disparity. So in Japan, you get fewer analysts covering with fewer pages. So there's really it makes a stock picker's market. What we do quickly is we think that in Japan there's kind of any place, there's three things that a company can do to create value. What they do as a business, what their financial value is, and their reputation value. If you looked at Japan, this is how a well-balanced company would look at. This is probably how most Japanese companies look like, right? Not a whole lot of focus on financial value, reputation value a little bit, and then really